Now, this man who's about to come up on stage, he started his life and career in marketing and advertising, and after years and years of working in some of the top Russian companies in Russia, or of course, top Russian companies in Russia, he launched a VC firm called Life.SREDA, right? I hope I'm saying that. Life.SREDA Venture Capital. He's one of the top 35 most influential fintech persons in the world, and one of the top 100 fintech leaders here in Asia. He's basically a rock star, all right? Yeah, please give a huge round of applause to Slava.
Good morning, ladies and gentlemen. My name is Slava. I'm managing partner at Life.SREDA, VC fund focusing on fintech. Thank you so much for MDEC and Bikesh to invite me to be here. It's an honor for me. Hope it will be I will be not so boring as usual. I launched this fund. Where is clicker? Thank you. I launched this fund 4 years ago. As I mentioned, we are focusing on fintech. Right now, we are managing 3 funds. Life.SREDA 1, totally deployed. We invested in 13 companies in US and Europe. We already made 6 exits. Some of our companies from first portfolio are quite iconic, like Simple Bank. We sold it for BBVA, Moving Bank, their direct competitor in US. We sold it as secondary deal. Feeder Bank just sold 2 weeks ago for French guys. Feeder Bank, Sum Up in Germany also, and famous group best fintech fund in the UK. We sold our stake for Barclays Bank. And 1 year and a half ago, we saw huge demand regarding fintech from Asia, and we decided to relocate our team from Moscow to Singapore, and now we are not Russian fund. I hope that we became a little bit Singaporean, and we feel that we are Singaporean fund, and we spent about 80% of our time just to travel across Asia to know more about use cases, customer behavior, hopes and fears of fintech entrepreneurs in Malaysia, Indonesia, Myanmar, Vietnam, South Korea, Japan. And we already made 6 deals, 6 investments for first years. And this April we launched our 3rd fund, the BB Fund, with Chris Skinner, David Breer, and Simon Taylor regarding blockchain, the BB Fund. I want to talk today regarding trends and results of first half of this year and what we can expect for next months or even 1-2 years in this industry. For sure, for first half of the year, we see highest rate of investments in fintech area, but it's not so important from my side because it is just sign that fintech is booming, and we have to understand that that investments in fintech area became twice, 3 times bigger than before each time, because it's normal. If you're a new industry, you're growing so fast, you're attracting attention of investors, consumers, journalists, and you have to grow as fast as fintech growing right now. It's not an accident, it's not a sensation regarding news titles. Banks still are not so active in this area. Only 26% of money which came from banks in terms of fintech investments. Still, this industry belongs to VC guys like we are. And for sure, for fintech founders, their main players in this industry, we are praying for their passion and new ideas. And this period, I mean first half of this year, Asia became #1 region in terms of fintech investments. It sounds very good and attractive and sexy, but it's not true. Because most of these investments came from China. To be honest, we have to talk that China became #1 country between whole regions in terms of fintech investments. Still, Southeast Asia not so active, but we are waiting that this region, with our participation, with participation of Bcash and other smart guys here, will grow faster than before. As I mentioned, high record amount of fintech investments. It's not sensation. It more important to talk about problems always. If you are growing so fast, you always will encounter it with some problems in terms of your growth stage. And I want to talk about 3 problems which right now more important for fintech ecosystem than new investments. First of all, it is that especially in Asia, you can become leader of the hill. You can become leader in Singapore, in Malaysia, in Indonesia, in some industry, in P2P lending, in online remittances. But in digital world, you have to scale to other countries. And scaling to other countries, it's an issue, especially in Asia, because infrastructure to scale do not exist. Each time when you will go to next country, next market, you will start your journey from the beginning. You have to find right partners, bankers partners to be licensed in new country. You have to be integrated with the backend directly. It's very long in terms of time. It's very painful. And next problem regarding B round stage investments. So many players here on seed stage and A round stage. So many players on late stage, which can be your potential buyers or strategic investors. But there is a gap. Who can invest into your company on B round stage? Who can invest in scaling? And second problem linked directly to previous one. And third one, it's about ambitions and arrogance. Chinese guys successfully showed us for last year that you can grow faster than before if you will be open to be merged with your direct competitors on your market to create bigger one company. But we thought for last 1 year and a half here with many guys, all of them trying to stay independent on their own companies. And for my own opinion, it's not so smart. You have to be open to unite your teams, technologies to create bigger and bigger companies, because such guys like Alipay, Rakuten, DST Global, Goldman Sachs, they want to invest a lot in fintech, but they cannot. Why? Because most of fintechs across Asia, especially Southeast Asia, are too small for their appetite. They can invest, for example, as minimum 20, 30 million in round 40, 50, in valuation 100 plus. How many fintechs with valuation 100 plus across Southeast Asia? It means that until you will create such kind of companies which will be prepared for their appetite, you will not be able to attract this money. And we as investors, or you are as founders, can wait this moment, can wait this organic growth, but it will be a very long story. Maybe even fintech will not exist at that moment. Maybe it's smarter to be open for negotiations, to be merged with your direct competitors on your market or complementary companies on other markets. One more interesting, very positive trend which we saw in US and UK, startups started to integrate their product between themselves. Like for example, Moving Bank. It is mobile bank for youngsters, and they have, as any mobile bank, problem with margin of their core product, but they have very great results in terms of customer acquisition. They attract new customers very fast, very cheap. They know a lot of data about these customers, and such companies like, for example, Common Bond, which provide loans for youngsters, especially for students, they have great margin as any online lending company, but they have issues with customer acquisition, especially cost per acquisition. But when these companies unite their forces, their energy to bundle their products, mobile bank for youngsters and loans for students together, they started to serve their target audience better than before. One company can provide customer acquisition, very fast acquisition of customers, and very cheap. And other company can provide margin when they will upsell, cross-sell their product based on this customer base. And other companies like Feederbank and SumUp, which started to tailor their also online bank for SMEs and MPS acquiring services for SME clients. They also showed for us that it will be very useful for customers to buy not standalone independent services, but to buy bundles. And it influence for margin of united companies better than before. It's great story how you can test partnerships between your companies will be merged together. It's great way how to create fintech ecosystem, not thinking only about we are trying to build our startup and our dream is to be sold for any big traditional bank. You can create your fintech bank. I will talk a little bit later about this idea. What is necessary today for fintech ecosystem across Asia? As I mentioned, we are here for 1.5 years. We met with 150 startups from different countries. What we heard for this period, they told us the same stories. When you decided to create your own fintech startup, you have to spend 3 months to talk with banks with whom you will be integrated, because bank will provide you license and opportunity to be regulated for your fintech vertical. After that, even CEO of this bank will sign with you some papers that he wants to work with you. After that, you will go to IT director of this bank. And this guy will not care about your decisions before. This guy will tell you that, oh, come on, I have my own duties, I have my own core business, and I have my own KPIs, and my annual bonus linked for this KPIs not to be integrated with you, you are not, you cannot influence to my annual bonus, and why I have to think about you more than a minute a day. And even after that, you will go directly to his employees and you will talk with them, and they will tell you that they do not have open APIs to be integrated with you as fintech startup, and you will spend half a year more to create direct integrations with their backend. It's not so safe and secure for backend of any bank. It's very long, it's very expensive. And finally, you have to spend 1 year in Asia to be launched. You will spend 80% of your resources, of our resources, which we invested into your company to be launched. In comparison with US, UK guys, they will spend 20% of their resources to be launched and 80% to attract and serve customers. And they will spend 3 months to be launched. For example, if you want to launch your fintech startup in the United States, you are going to Bancorp, your negotiations with them will spend for you 1 week, maybe 2 weeks. That's all. They will send you via email the open APIs. You will plug in these APIs inside your app. That's done. And what we are trying to do right now, what we are suggested for other players here, not only for other funds, fintech startups, but for banks, for regulators. Let's create together some middleware between banks across Asia. This middleware will consist from 50 plus APIs. And if you are a fintech startup, will go to this platform, you will be integrated only once. And after that, this platform will link you directly to backends of each banks. And we want to reduce IT costs of any bank across Asia which will decide to came to this platform not to spend open APIs by themselves. We want to provide them new revenue streams because it will be revenue share model, and these fintech startups, more than 150 fintech startups, also messengers, also e-commerce giants will come to this platform, and they will provide you immediately new revenue streams and what's more important, new products for your customers. You will be not, you will be able, but it will be not so necessary to create new product by yourself. It's very smart today. Let's check last financial report of PayPal. PayPal, they decided in 2013 not to develop whole products by themselves. Even this successful fintech company decided not to create whole new product by themselves. They decided that it's smarter today because whole other world will be smarter than you always. You cannot hire whole talented engineers, product guys into your team. And in horizontal world, you can put more energy to create platform which will be used by these third-party developers across the world. And if you will check last financial report of PayPal, this is their expenses for employees. They're growing until 2013, and after decision, going down. And profit growing until 2013, but after that, they're growing twice faster than before. The same for Stripe, 5 billion valuated fintech startup. They always had and still have 70 employees. They do not need to hire more. Why? Because these employees always care only about platform. How this platform will be useful for third-party developers across the world. And so fast growth of Stripe belongs to third-party providers, thousands and thousands talented guys from US, UK, Brazil, any country across the world. I mentioned a little bit about the idea of fintech bank. Previously, and still, most of fintechs thinking about we are creating our fintech startup to be sold for big traditional bank. It's not true today. Why it's happened before? Because banks always had and still has a whole bunch, whole product line to serve whole needs of potential customers. And you are, as fintech startup, provide only one toothbrush. But today, so many players inside each verticals in fintech, and if one player in each vertical will decide to unite together, they will cover whole potential needs of potential customers. It means that this company will not need other products from banking side. Their customer base also will be very big in terms of to compete with traditional banks. Even, for example, e-wallet by Starbucks in US, bigger than several big banks in US. PayPal already for 3 years, bigger than many banks in US. It's e-wallet just. And in terms of margin, several products can provide very fast and very cheap customer acquisition. Other products can provide margin. It means that typical argument by whole traditional banks, you will be not able never to compete with us because we are more profitable than you are, also not true today. Combination of different fintech products already provided on several markets higher margin than traditional banks can create for today. And I can compare this customer experience with Tesla user experience, because Tesla is not only about electric cars, it's about ecosystem. They provide you as for customer electric cars, network of chargers, online 24/7 customer support, software for your tablet, which you're using to manage your Tesla car, integration with insurance companies, because before Tesla, nobody between insurance companies didn't understand how to provide you insurance for electric car, and right now Tesla did this integration also. And they do not need necessary to create whole elements by themselves. They providing you integration of these elements, and whole elements can be provided by third-party companies. But they are selling you customer experience, like Apple. Regarding trends, I mentioned that today I want to talk about industries, verticals in fintech, which grow in faster than others, and which problems we can see for next steps for them, and what we can advise. Regarding online remittances, I want to highlight several points. First of all, whole companies like Azimo, TransferWise, Currency Cloud, Remitly, they just successfully attracted new rounds for last first half of the year. Where Asian players? We know for sure success in terms of P2P remittances of WeChat, but only in China. What about pan-Asian players like Azimo or TransferWise? Or vice versa. These guys want to go to Asia, but they came to us and told, when we came to local banks, local regulators, mostly for local banks, they told, we do not have infrastructure to be integrated with you. If you want to go to our market, please at first invest to infrastructure, and you will be integrated with this infrastructure after. But they told, why? We are just a startup which providing only one solution. We do not want, we are not able to create whole this middleware infrastructure to be integrated with you. Regarding e-wallets, right now we see such, and also what I want to add regarding online remittances. Many skeptics talking about low margin of this product. But just one example from South Korea. There is such company named TOS. It is like Venmo for South Korea. They already attracted 4 million users for last year. They already made $1 billion transactions. And right now, they're launching online lending business and online insurance business too. And why they will be successful? Because if you want to launch some kind of lending products in Korea, it's very, very hard, not only in terms of banking regulation, it's very hard in terms of advertising. It's forbidden to advertise loan products in South Korea via TV commercials, even via internet, they have many limitations. But if you attract it as, not as business, as core business, as customer acquisition channel, attracted 4 million users, you can advertise for them any kind of loan products for free. Nobody will limit you. And regarding your potential risk per borrower, it will be also lower because you will know so much data about these potential borrowers in advance because they previously sent it many times money for their friends, and you know really about their customer behavior, even about their community, because they send it money for somebody, and you also know something about these friends or relatives of these guys. Regarding e-wallets, right now we see such period like Cold War. From one side, guys like Apple Pay or PayPal, right now they're spending all their time and resources to expand to other countries. And Apple very successful in these terms. Guys from Asia, WeChat, Alipay, they're not so successful. For Alipay, for example, for them it's easier to buy local leaders like Paytm in India, and they're always trying to find the same big companies in other regions. They tried to came to Europe through UK, but finally we will see their results. Today it's very early to talk about their success. Samsung growing not so fast as Apple Pay. They covered right now only about 4 or 5 markets in comparison with about 20 markets by Apple Pay. And how are the guys? Regarding my previous slide, scaling, it's an issue in Asia. And second problem for e-wallets, how you will provide and which services you will provide to cover other needs of your potential customers. Because, for example, PayPal, they provided for us opportunity to see power of partnerships. Right now, most successful product, new product between PayPal product line, it is PayPal working capital. They provided very successfully with high rates loans for SMEs. They just started to test this product for final customers, for retail customers in the UK. They are fast and successful not only in terms of scaling to other countries, but also how to be partnered with other players. And what about other guys here, other e-wallets? Regarding neobanks and challenger banks, we saw for the last year so huge growth of these players in the UK. Why? Because from one side, customers tired to wait innovations from big guys, traditional banks. From other side, traditional banks understood finally that it's not so easy to create new solutions for these customers, and maybe it will be smarter to give out for new players opportunity to build something for new customers, and after that, to buy out these guys. Okay, it will provide several millions or thousands of millions for these founders of these teams, but finally it will be cheaper and better for big guys, for traditional banks, to buy out these players. In Asia, we saw only few guys like Neat in Hong Kong or YOLOLite in Singapore, which are trying to build these apps. We talked with regulators in several countries across Asia. They do not want to provide such kind of light licenses for neobanks like UK regulator provided 2 years ago. And regarding customers, I think that only this part of ecosystem can push founders, push banks, push regulators to open a little bit this industry. Maybe it will be smarter for, maybe not, for Asian traditional banks, big banks, not to wait local players if they still not exist. Maybe it will be smart to be integrated with British guys, because they will be already in terms of 3-12 months tested successfully on the UK market, and after that you just can organize partnership here for local markets. Regarding different kinds of P2P lending, P2B lending, online lending, right now whole lines between these verticals already blurred, because, for example, companies which started to provide P2P loans, they already launched the P2B loans. P2B platforms started to provide crowd investing services, crowdfunding services, and right now we are talking about how fast this industry will grow and how active banks and regulators will support or this industry or will protect traditional banks still. Because, for example, in the US, in the United States, what we saw for last months, banks finally understood that these players can compete with them very successfully, and they tried to push regulator, please regulate these guys more than before. We see a huge battle in terms of hidden negotiations with regulator in the US, and banks not try to compete via better service or better rates or better solutions with these guys. They try to go to, hi regulator, you know us very well, please protect us. In other countries like China, we see other situation. Regulator didn't care a lot before for these kind of services, and we saw finally to the end of last year more than 2,000 P2B platforms, and finally most of them started fail. But it's not bad. Why? Because still big companies in this area in China, they are successful, and their risk per borrower also low. Only small and medium guys, which didn't care about risk policy, compliance, etc., yes, they failed. It's always happened when you're a young industry, but big guys provided us data that everything okay with this industry and plans, and they also interacted successfully last round in China, and several companies already listed in US on stock exchange. Regarding services like MPS acquiring, online acquiring, most of skeptics talking about that how you will survive because your margin per product is very low, and most of these companies still unprofitable, even Square. But Square showed us for first half of the year that they can increase margin per customer very high if they started to launch SME loans named Square Capital for their customers. And these loans will be very high margin because they will be pre-approved, and in terms of customer decision to borrow this money or not, it will be very short customer journey, because this loan already pre-approved based on your previous transactions. In terms of risk per borrower, risk also will be very low. Why? Because you, as a bank, know about your potential borrower only based on data from Federal Credit Bureau. But Square, for example, knows not only about their current financial statement, they know about how many customers do they have, how many of them are loyal, what kind of purchases they prefer, how fast they will return to Square, how many employees do they have, how many of them are successful and active and increase their results, and how many of them, how successful you as a manager, as owner of this business. Do your understanding of your SME borrowers the same quality like Square already understood based on their transactional business? I think that no, because banks still thinking about only about money, and Square thinking about whole cycle of your business, and they understood much more regarding your future than just based on you have this profit, you have these losses, that's done. You're a good customer or you're a bad customer. The same for online acquiring. Such companies like Cabbage, which linked with eBay, Amazon, they know about your future more because they analyze not only current situation, but also speed of growth, and also how often and how fast your customers will return to you as second, third purchase. Right now, I think that for the last year, three sexiest words in fintech became unbanked. Everything started to talk about unbanked. If previously whole pitches which we saw in New York, London, Singapore, Hong Kong were about hipsters and geeks, right now everybody talking about unbanked customers. It's great. Also, I want to say thank you for such guys like Bill and Melinda Gates Foundation and World Bank with IFC. They spend so much time, of money to share their knowledge and regarding potential of this industry. And finally, we saw after 1 year of their investment into inspiring people to do something for unbanked customers. And right now, we saw more than 200 startups for unbanked customers. It's great, especially for Asia. Second sexy word in fintech became insurtech, because insurance industry very, very old-fashioned. And but right now, insurance companies saw what happened with banks regarding fintech startups, and they started in advance to talk with fintech startups, insurtech startups regarding what can happen with our business. And they are not against newcomers. They try to help them. They try to educate themselves based on knowledge, insights from these new guys. And third one is about blockchain. If previously when we talked about Bitcoin, it was mostly sounds like speculations regarding hot topic, more PR than real deals. But when we started to talk about, when hype regarding blockchain went down, and real knowledge regarding basic technology of Bitcoin, blockchain technology started more and more cleared for understanding of other people, and new talented guys came to this industry, we saw real demand, and from other side, real solutions. I want to talk about one example, company Everledger. I think that most of our guests here do not know about this company, but it is a real example of real business built on blockchain. They started to think about also P2P remittances, something like that. But after that, De Beers, one of the biggest diamond company in the world came to them and told, come on guys, stop to think about this shit. We have real problem, because about 30% of our diamonds which we found in Africa came to gray market. Can you use your blockchain technology to reduce this risk, to reduce this gray area for our business? And finally, they started to provide equipment for whole factories of De Beers to make 3D photocopy of each diamond, not as photo, but as data, because each diamond in the world have their unique fingerprint based on numbers of angles, transparency, color, and size. And this is data, this is not about image. And they started to share this data with banks, because banks use diamonds as collateral, with insurance companies. They started to provide not only data about these diamonds, but also about provenance of these diamonds. And it's very useful for guys which try to estimate price per each stone. And right now they're trying to do the same in fine art, because fine art, it's not about art. Most of paints which we can buy on different auctions like Sotheby's and Christie's, guys which bought this piece of fine art, they bought it as investment. It's art banking. And they are trying to provide services to estimate provenance and clarify KYC for these pieces also. They want to go next year to expensive watches and cars for the same reasons. Regarding verticals in fintech, which do not attract a lot of attention for today, but they are useful in terms of growth for complementary verticals for bigger companies. As I mentioned, it can be crowdfunding, crowd investing for P2P loans, or even for online trading. Right now, guys like Betterment or Welshfront, they're going to crowd investing and P2P lending too. Why? Because it can be also ways how to invest your money on the market. You can buy not only stocks on NASDAQ, shares on NASDAQ, you can invest your money through P2P loans. And these guys with 100 million customer base, they're very, very able to compete with traditional banks to go to this industry. I want to say thank you and to advise you to download our new report, Money of the Future. You can download it in English, and maybe if you want in Chinese, Japanese, and Korean from our side. We already have more than 20,000, about 20,000 downloads for the first 10 days. You can be new customer of this knowledge. Thank you so much. Thank you for invitation. Hope see you soon. I will be around.